If you're worried about your retirement savings losing value to inflation and market crashes, you're not alone. I'm about to show you 5 ways to invest in silver, ranked from worst to best for protecting retirement wealth. And I'll reveal the method that old money families have used for generations, which isn't what most YouTube investing channels tell you. Welcome back to the channel. I'm here to help folks like us, people who've worked hard their whole lives and want to protect what we've built. Today we're talking about silver investing, and I'm going to be completely honest about both the opportunities and the risks. Silver has been money for over 4,000 years, and there's a reason central banks and wealthy families still hold it today. But not all ways of investing in silver are created equal, especially when you're thinking about retirement security. Let me start by explaining why silver deserves a place in your retirement strategy, then we'll dive into the 5 methods, ranked from least to most suitable for our goals. Before we get into the methods, let's address the elephant in the room. Why silver? First, it's inflation protection. While the dollar has lost over 95% of its purchasing power since 1913, silver has maintained its value over centuries. Second, it's portfolio insurance. When stocks crash, precious metals often hold their value or even rise. Third, it's tangible wealth you can hold, unlike digital assets that can disappear with a computer glitch. And finally, silver is more affordable than gold, making it accessible for regular folks building retirement security. The key is choosing the right method for your situation. Let's start with method #5, silver mining stocks. These are shares in companies that mine silver. The appeal is obvious. You can buy them in your regular brokerage account, they're liquid, and when silver prices rise, mining stocks often rise even more. But here's the problem for retirement investors. You don't actually own silver, you own a piece of a business. That business faces operational risks, environmental regulations, labor disputes, and management decisions that have nothing to do with silver prices. I've seen mining companies go bankrupt even when silver prices were strong. Plus, these stocks are still tied to the broader stock market, so when the market crashes, exactly when you want your silver insurance to kick in, mining stocks often crash too. They're speculation, not insurance. If you do invest in mining stocks, limit it to 2 to 3% of your total silver allocation and stick to established companies with long track records. Method #4. Silver ETFs, exchange-traded funds. Popular ones include SLV and SIVR. These trade like stocks but supposedly track silver prices. The advantage is convenience. You can buy and sell instantly during market hours, hold them in retirement accounts, and there's no storage hassle. But dig deeper, and you'll find serious issues. First, you don't own silver. You own shares in a fund that claims to own silver. During a real crisis, will you be able to exchange your shares for actual silver? The fine print is murky. Second, these funds charge management fees that eat into your returns over time. Third, there are questions about whether these ETFs actually hold all the silver they claim. Pure investment vehicles without collectible considerations. The most popular sizes are 10-ounce and 100-ounce bars from recognized refiners like APMEX, JM Bullion, or Pamp Suisse. Now, bars do require more careful authentication when selling, so stick to well-known brands with assay certificates. Storage is also more critical. These aren't coins you keep in a drawer, but for building serious wealth protection, bars are unmatched for efficiency. One important point: don't go bigger than 100-ounce bars. 1,000-ounce bars are for institutions, not individuals. The sweet spot for most investors is 10-ounce bars for flexibility and 100-ounce bars for efficiency. I personally use a mix of both. Now, owning physical silver raises the crucial question of storage and security. You have 3 main options: home storage, bank-safe deposit boxes, or professional storage facilities. Home storage works for smaller amounts, maybe up to $25,000, and gives you immediate access. A good hands the risks. Even then, they're trading vehicles, not long-term wealth protection. Now we're getting to the good stuff, the methods that actually make sense for retirement protection. The top 2 methods both involve owning physical silver, but there's an important distinction that most people miss. I've put together a detailed comparison checklist in the description below that covers storage, insurance, and liquidity factors for each method. Method #2, physical silver coins. This includes government-minted coins like American Silver Eagles, Canadian Maple Leafs, and Austrian Philharmonics. The advantages are significant. You own real silver, they're beautiful to hold, they're recognized worldwide, and they come in smaller denominations that are easier to sell if you need partial liquidity. Government coins also carry sovereign guarantees of weight and purity, so authenticity is rarely questioned. The premium over spot silver price is higher than bars, typically $3.5 per ounce above the silver content value, but that premium often holds during resale. For many retirement investors, coins are perfect. They're psychologically satisfying, practical for small purchases, and easy to store modest amounts at home. However, if you're investing larger amounts, say $50,000 or more, the premiums add up. A $2 per ounce premium on a large purchase becomes significant money. Also, coins take up more space per dollar invested compared to bars. My recommendation, coins are excellent for your first $10,000, $20,000 in silver, especially if you're storing at home. Focus on the most recognized coins to ensure easy resale. Method Hash 1. Physical silver bars. This is the method wealthy families have used for generations, and it's my top recommendation for serious retirement silver allocation. Here's why bars win. Lowest premiums over spot price, especially on larger sizes. While coins might cost $1.35 over spot, bars can be purchased for $1.12 over spot, sometimes less. They're space efficient. A 100-ounce bar takes up less room than 100 individual coins, and they're pure investment vehicles without collectible considerations. The most popular sizes are 10-ounce and 100-ounce bars from recognized refiners like APMEX, JM Bullion, or Pamp Suisse. Now, bars do require more careful authentication when selling, so stick to well-known brands with assay certificates. Storage is also more critical. These aren't coins you keep in a drawer, but for building serious wealth protection, bars are unmatched for efficiency. One important point, don't go bigger than 100-ounce bars. 1,000-ounce bars are for institutions, not individuals. The sweet spot for most investors is 10-ounce bars for flexibility and 100-ounce bars for efficiency. I personally use a mix of both. Now, owning physical silver raises the crucial question of storage and security. You have three main options: home storage, bank-safe deposit boxes, or professional storage facilities. Home storage works for smaller amounts, maybe up to $25,000, and gives you immediate access. A good home safe, proper insurance, and keeping quiet about your holdings are essential. Bank-safe deposit boxes are affordable but have limited access hours and potential government access issues. Professional storage facilities offer the highest security but charge annual fees, typically 0.5-1% of value per year. The choice depends on your amount invested and comfort level. What's critical is having a plan before you buy. I've included a detailed storage comparison guide in the description that covers insurance, costs, and security considerations for each option. So how do you get started safely? First, educate yourself on current silver prices and market conditions. Silver is more volatile than gold, so timing matters somewhat, though dollar cost averaging over time reduces this concern. Second, choose reputable dealers. Stick to established companies with strong Better Business Bureau ratings and transparent pricing. I'll link to the dealers I personally recommend in the description below, companies I've used myself and trust with my own investments. Third, start small and build gradually. Don't rush to convert your entire portfolio overnight. Begin with 5 to 10% of your investment assets in silver and see how you feel managing physical precious metals. Fourth, keep detailed records for tax purposes. Silver sales may be subject to capital gains tax, and the IRS requires reporting of large transactions. Finally, resist the urge to constantly check silver prices. This is insurance and long-term wealth preservation, not day trading. Let me quickly cover 3 common mistakes that can cost you money. First, paying too much premium. Shop around and understand that premiums vary by product, quantity, and dealer. Don't buy the first thing you see advertised. Second, falling for rare coin sales pitches. Telemarketers love to sell collectible silver at huge markups. Stick to bullion. Silver valued for its metal content, not rarity. Third, inadequate storage planning. Don't buy silver and then worry about storage later. Have your security plan in place first. These mistakes can turn a smart wealth protection strategy into an expensive learning experience. Here's my final take on silver for retirement protection. It's not a get-rich-quick scheme, but it's proven wealth preservation. For most people watching this channel, I recommend a combination approach. Start with recognized silver coins for your first $10,000, $20,000, then shift to bars for larger amounts. Keep total precious metals allocation to 10 to 20% of your investment portfolio unless you have specific reasons to go higher. Focus on reputable dealers, secure storage, and long-term thinking. Remember, silver is insurance first, investment second. It's there to preserve purchasing power and provide portfolio stability when other assets struggle. Don't expect it to double overnight, but do expect it to hold value over decades when paper assets might not. Silver investing isn't complicated, but it does require thinking differently than stocks or bonds. You're buying tangible wealth that's been valued for millennia. Whether you choose coins or bars, the key is getting started with a solid plan and reputable dealers. If you want to see the exact checklist I use when evaluating silver purchases, along with my recommended dealers and storage options, I've included everything in the description below. And if this video helped clarify silver investing for you, please subscribe for more retirement protection strategies. Until next time, keep building that financial security.